right? In discount, interest payments is flat 4,500 and it is higher, interest expense is higher than interest payment. The difference is called discount. And the bond value, see, bond value increases in 5-year maturity. Why there is can here? Because this is 5 years, but interest is paid twice a year. So interest periods are 10, right? Life is 5 years, but interest periods are 10. So that's why after 10 periods of interest, bond value will move from 96,149 to 100,000, wiping off all the difference here. So amortized discount gonna be at the end eventually 0, right? Okay. So how we record this one? Simple. So when we pay the interest here, this interest rate, it is on the accounting cycle. So we pay the interest gonna be decreased by 4,500. Cash is decreased by 4,500, right? Right? Cash is decreased by 4,500. Interest expense is this. This will go to income statement. This is not balance. So we are going, the balance is mean it is the decrease in the discount, or discount on bond payable is credited, expense decrease, credit. That's why 307 is decreased. This will go to balance sheet. This will also go to balance sheet. This will go to income statement, right? Now this second interest, which is due on next year, 2015, but we are on the end of the year. So it means we don't pay any cash, so we make it as account payable. Our interest expenses 4,823, our discount, which is decrease in expense 323, and interest payable 4,500. Simple, right? So what will be the, what will happen to the, what should be the income statement and year-end report for the balance sheet? Let's talk about after a 5 minutes break, and then we solve this issue. Okay? Let's take a 5 minutes break. Okay, class, welcome back after a short break. So we were discussing about the issuing bonds on discount, right? So we have this illustration, that is, what would Southwest Airlines 2014 income statement and year-end balance reported on the bond? So here they will be reporting bond value 96,775, discount 3,221, and their income statement shows interest expense 4,807 plus 4,823 here, because income statement is made after year end, so whole year. So this is one semi-annual interest plus this is other semi-annual interest expense. So total interest expense gonna be 9630, and on balance sheet it will be reported as here. So why there is 4,500 interest payable? Because this interest 4,500 will be paid on next year. So we are closing our books of accounts on 31st. So that's why We also report interest payable 4,500 as well, right? And our discount has decreases from 3,851 to 3,221, right? So I'm going to set up the break-even, breakout room, not break-even room, breakout room, and please take a picture of this illustration and solve it by yourself. So we have given all this information, so you need to make the data like that, okay? It is issued at discount, or you have to make amortization table for December for the first year, that's it. So remember, here we do not have any interest payable. Why? Because the payment dates are under accounting year. In our illustration, in our example that we just did that, the second payment was on 1st of January next year, but this is in this year, so we don't have any interest payable. So just take a picture, and I'm going to be setting up the breakout room. So you have 15 minutes to do this example. And remember, in our breakout room, please turn on your camera. I want everyone to involve like face-to-face study. You must turn on your camera and your microphone, okay? So those who are watching online, pause the video here, take a picture or just see the screen here and do this example by yourself, and at the end compare your answers. Here we go. So I'm going to pausing the video here. I'm going to be resuming the video after this breakout room activity. Okay, class, welcome back after the breakout room activity. So let's do it together. So Chimura Limited is authorized to issue $600,000, 5% 10-year bond payable. So remember, this is authorized to issue. It has nothing to do whether they have actually issued or not. So the company is registered to authorize or registered for maximum bonds issuance of 600,000. So that is just for extra information. On December 31st, 2014, when the market interest rate is 6%, the company issued worth of $500,000 bonds payable and received 462,808. It means it is issued on discount. If this is not even mentioned, you already know that this is issued at discount. So what is the company coupon rate? Coupon rate is only 5%. So this information is only relevant for coupon. Okay? And market interest rate is 6%. So, and the payment of interest is semi-annual. Dates are given here. So prepare bond amortization table for first 4 interest periods. So 2 years you have to make the interest payments, and for 1 year you have to make the entry. Okay? So first of all, let's make amortization table. Here we go. So bond issued at discount. So this discount is coming from 500,000 minus the carrying value of 462,808. Answer is 37,192. So that is the discount balance. So what is the interest payment? Interest payment is 5% of stated amount or maturity value. 5% of 500,000. This 5% is for annual, so you multiply it with 6 by 2. 6 by 12, answer is 2.5. 5 multiplied by 6 by 12, answer is 2.5. So this is the fixed amount of payment that you are paying, and 13,000. This interest expense is coming from 462,808 multiplied by 6 multiplied by 6 by 12. So this is your interest expense. So difference is 1384. That will be added to our carrying value and less from our discount, right? So this is how we calculated our discount. Discount will be decreased and our value of carrying value will be increased, right? Second part, we have to make the entries. So remember, first entry gonna be when we issue the bond and receive the money. So we issued the bond at 462,808. So this much amount we received. So entry would be cash. So entry would be cash with this amount, bond payable with 500,000, 462,808, and the difference is this much is the discount here. Right, difference. So let's see here. Cash, right? Second entry for this period for interest. So you will pay the interest, right? So interest pay, it means cash is going out. Cash, how much gone out? 12,500. Interest expenses 13,808, and decrease in discount is, or decrease in expense, 1,384. So entry would be interest expense 1,380, interest expense 13,884, discount on bond 1,384, and cash. Interest payment is your cash. Remember, this is not interest expense. Interest payment actually cash going out from the business, right? Second, the last one will be, since it is done within the financial year 31st of December, so there is no interest payable. So this entry going to be again interest expense to discount to cash, right? So you understand, Marilyn, Nam, Pinyo, Harry?
Yes.
Yes.
Yeah.
Okay, so that's all for today's lecture. I would be uploading assignment 8, and remember assignment 8 include only the discount analysis. So regarding premium, how we deal with the bond issued at premium, we will be talking about in our next class, and in next class we will be also covering honors equity as well. Okay, then we will be officially closing down our total balance sheet. So we have done assets, liabilities, and then only done with honors equity. Okay, remember our final exam is going to be on 29 of June. Okay, I would be also talking about the paper pattern and also all those stuff in our next class. Okay, so that's all for our today's lecture.
Okay, sir.
If you have any question, please
Thank you.
write us.
Thank you, sir.
Okay. Okay.
Thank you.
Take care. See you next time.
Thank you.
Bye bye.
Do I have to send you the
Bye bye.
what I did? Sir?